Welcome to another stock analysis video performed by MajesticTrader.com, where active traders see greater profits. So let's begin. Hi everybody, this is Ron.lang with MajesticTrader.com doing the weekly S&P video analysis, and we're also going to review some market leaders and provide a market forecast. You are looking at the daily S&P chart, and we've been using this chart for probably the better part of the last year to really determine where we are, where we're going, and the best way to do that is to look at where we've been. And we identified this little yellow ellipse area here as very, very strong support back when we peaked around 1292. And you can see that we've just basically been range bound and saddling this 1256, 1257 area. So where do we go from here? We had this huge spike down on Wednesday that was really just a bunch of ridiculous news coming out of the EU. Everybody was talking about everything falling apart, allowing select countries to leave the EU. And realistically, you know, everybody got past that because we knew this group of candlesticks here was showing that the market wants to go higher. And we're predicting, as we've said earlier, that we're going to be between the 1300 and the 1325 area before year end, and we still think we're going to go there. So we have about a week and a half before we get to Thanksgiving, and we think we're going to be retesting this 1300 level by that Thanksgiving time frame. So we still see some more upside here, perhaps a couple of doji pullback days, but we really look we're really looking at 1300 within a week to 10 days. Then we'll probably see a pullback in December, probably to the 1250, 1275 area before we make our last push up to the 1300, 1325 area. Unless there is major, significant news coming out of the EU that something is going to fall apart, we are going to pull back below the 1227 area. And we identified the 1227 area as the true bottom of the range, and we were there twice this past week, and the 1227 area held very, very strong and very true. So we're still looking at this as being the bottom of the range. We're looking at 1225, 1227 here at the top of the range. So if we take a look at some of our market breadth indicators, we are looking at the trend. It's been trending up, showing a little bit of uncertainty here. We've had a couple of very strong advanced decline days down here. So we're looking at this overall average trend to be trending down, which is more bullish. And the same thing on the weekly. You could already see on the weekly that this average here has been a little bit more of a smoothing mechanism, and we could see that it's been trending towards bull. Looking at our ADD, we can see this very strong trend line here that we bounced off of 4 times. And right now I'm looking for this to continue. We'll probably stay between 500 and 800 between now and the end of the year. We might have a couple of pullbacks, but we're looking to finish up between 500 and 800 here before the year end. If we look at the weekly, we're looking at a very strong trend. We had a little bit of a double bottom that set in here in late September, early October. This was around October 4th, and then we've done nothing but strongly trend upward. Let's take a look at our market leaders. First is IBM. We identified with IBM that we're looking for a strong pullback. With the market that we had on Thursday and Friday, we had looked like that we were going to pull back to this area here around 179, but we had a very strong day today. The one thing that is concerning, and it concerned me last week, was very low volume. We've had some pretty low volume days here over the last couple of weeks. Wednesday of this past week was the strongest day of the week, and that was on a lot of down volume. So even though it might feel like that we're standing in quicksand with the low volume, and at any point we can get some surges downward, I think it's important to look at that. So let's look at Chevron. Chevron again came up to the supply resistance area here, pulled back, shot back up today, again on less than average volume, but we're still looking at a pullback here to around 100 to 101 before it potentially goes upward. We could see we have a nice W that formed here, came back into a demand area, so we're looking for another pullback before we try and really break out here to that 109, 110 area. McDonald's has just been very, very strong. And we're looking at this wedge. And within this wedge, we're looking for McDonald's to go higher, perhaps even test the $97, $98 level before the end of the year. We don't look at it going below 90, 91 before year end. So we're looking for it to stay within this wedge for price compression. If it does break it, we're looking for it to come back to this demand support area here, which we look at would be a buy before, again, it retests these highs, the all-time highs. Caterpillar has been pretty strong also. It came back down into this demand area here, so we're looking for upside around 101, 102 on Caterpillar before year end. We've shown some price compression. It peaked just above it, closed it right near its high today, so we're looking for this to continue up to the 101 area. Apple had a very rough day today on news that it's having trouble meeting demand. I mean, it would be nice if all companies had that issue of meeting demand. So one of the things that we looked at last week was the target area here of around 375, 376. Right now we have some price compression within this pennant that's forming. Now this is a bullish pennant despite this tremendous gyration in price action. We're still looking for it to break and come down to the 375 area here. If it truly breaks down, we're looking for the 355 area. If it breaks 355, we're now looking at 325 down here. I can't see that happening before the end of the year. Apple is just minting money whenever they want, and despite the fact they might have some problems meeting demand, they're still minting money, and this is still going to be a strong stock in demand, whether it's at 365 or 355, unless there's just some horrific global news that comes out. I don't see it actually breaking the 355 area or coming down to 325. Google actually had a terrific day today, up over, I believe, $14 at one point. But again, it's having a very tough time getting past this very strong resistance supply area. So we're looking for it to kind of stay within this wedge, perhaps capitulate between 612 to 625 area here. It might even pull back to the 556 range, but we're looking at Google to stay strong. Perhaps, like I said, capitulate and stay range bound above 610 between now and the end of the year. ExxonMobil has been very strong. We have this very nice wedge pattern here that it's been staying in really since early August and since the lows it was making in September, early October. And we're only looking for more upside of Exxon to about the $83, $84 level, back to that support resistance area. Walmart actually has been very strong. We're looking for a pullback to the the $56, $57 area. So we're looking for it to pull back to this demand area, break through to 56, 57 before it goes higher. Procter & Gamble has actually had a lot of very mixed pricing action, a lot of gyrations within this price wedge. We're looking for it to actually break down below this price wedge to a pullback of the $61 to $62 area. Let me expand this a little bit. So we're looking for this $1 range for it to pull back before it potentially goes higher. Everybody needs consumables. We look at Procter & Gamble more to the upside 6 months, but in the short term, we're looking for that pullback. GE has not really rallied with the market, so we see some additional price compression here. We have a very ugly hammer formation today. So we're actually looking for a pullback of GE, but really to be really range bound between the 1671 and the $15 area. So we're not looking for a lot or expecting a lot out of GE, but we're looking for it to be range bound. And we're looking for the upside here at best if we get a tremendous end of year rally to be around 17 to 17.15, but not much more than that. Telephone, AT&T. Again, we've had some very interesting price compression in here. It actually peaked up, as we mentioned last week, to the supply resistance area here, pulled back, and we're actually looking for more upside here, probably to the $29 to actually $30 area. So we're looking for it to actually break this price compression here to the upside, looking for around $29.75 to $30. Microsoft actually had some very good price action today, but we did it on some very low volume. With Microsoft, typically they usually get some good end of year numbers, but we're actually looking on a pullback on Microsoft to the 24.75 area before it potentially goes up. If we do break to the upside, which could very well happen here with a good strong end of year rally, we're not looking for more of an upside to 27.76 to 28. We do not look at a breakout above that. We're looking for some more range-bound action on Microsoft, which again is all you can expect for the last 10 years anyway. Coca-Cola, which has been very strong in its sector, has had a lot of price compression as we've identified here. Kind of have a little bit of an ugly candlestick with a hammer, bearish hammer here. So there's a very good possibility that depending on what happens here in the next 6 weeks, 7 weeks, that we could get a pullback here to this demand area around 65.50, 65.75 before we break higher. If we break this area here and go higher, we're looking at a target of around 70.50 and not much more than that between now and the end of the year. The Dow Jones Transportation Index has again been trading a little bit sideways here. We're looking for an upside of around 50.40, 50.100, and that's really about it. We still see some sluggish action in the economy going into the first quarter of next year. The transportations is a terrific barometer of what's going to happen here going into the next year. We're not looking for much. We're looking for a rise in the stock market between now and the end of the year, and the transportation group should participate in that, again, a little bit to the upside. And that's our review for the week of November 11th, going into the week of November 14th on the S&P and our market leader. Thank you for attending another MajesticTrader.com's stock chart analysis. Visit our website to request one of our newsletters. Go to our website at www.majestictrader.com. In the upper right-hand corner, put in your email address and your name, and we'll send you out a copy. Once you become a member, you'll have access to complete trade performance, all stock analysis videos, archived newsletters, and midweek alerts that are trading ideas. We'll send those out to you via email. Again, thank you for attending.